Hello traders and future traders. Today's video is going to be an amazing video. I hope that it's helpful and beneficial to you guys. Alright, you can backtest it, you can use it to your trading advantage, right? But please backtest it first. Also, my last video to this one, if you're looking at this one, my last video I did a trade, a Fibonacci trade, Fibonacci target. My target was at the 61 on the Fibonacci, and it executed beautifully. So you can check out that video and see what I did, what was the trade, and so on, right? So today's video is going to be about an indicator called the ATR, known as the average true range. So we're going to talk about that today. Now, the average true range is the estimated value of the size of a candlestick, meaning, yes, I can use it as a prediction in terms. I can say, let's say the monthly candlestick and past data have a certain average, even the weekly candlestick have a certain average, the daily candlestick have a certain average, and even the 4 hours, the hourly, and the 15 minutes, each of them have an average on past data. So what I can use that to my advantage to take some pips off the market presently, if you understand where I'm coming from. So on that average, I use that majority of the time to execute my trade and exit my trade. All right, so the ATR, and let's talk a little bit about it. So let's say today is Monday, right? And Monday, and this will be the market for Monday. So let's say market open here on Monday, Sunday, Monday, and it started to go down, right? On the M15 time frame, right? So this is my M15. So I'm looking at my M15 chart, market started to go down, and majority of the time on a Monday you would see the market either start up or start down. So what are we using the ATR for in general? To say, okay, market open and it went down, it's going down pretty strong. Now if I do have a support in an area, probably let's say here from Friday, Thursday, whatever my support area is, and I know that on an estimated value, if I look at the size of the candlestick on the daily time frame, which is this area here, right? What during that session the pips was for that particular trading session. So let's say, okay, market open and here's Asia, and after Asia we had London open. So London open here, and during London, mid-London, you saw this, right? You saw that aggressive candlesticks going up. Let me just redraw that. Mid-London, you saw aggressive candlesticks going up. And what I like to do is use the ATR if I'm at a support area, and you know I'm not looking to stay in the market very long, so I use the daily ATR to know on an average for my take profit. All right, so let's say, okay, I want to take a buy at that location here, and now I use the ATR to tell me what is the estimated value of that particular currency pair. Now let's say this currency pair is the EUR USD, right? The euro versus the US dollar. And I'm taking a buy here because I saw probably a particular pattern that I like to trade, right? Maybe a W pattern, right? Maybe I saw a W pattern here and I exited. I take my buy. What will be my exit? How long that I'm looking for? Am I seeing a support in this area here, or could I use the ATR to exit? So majority of the time I use the ATR, which is the average true range, to exit my trade. All right, so let me show you live on the chart how you can know the average of a candlestick. So let's go to the MT4 chart, and I'm presently on the Euro USD. And now let's bring up the ATR. There's this plus here, you click it and you go down to oscillators and you would see the average true range. Now on the average true range, I don't do no interfere with no settings, and I do not use the blue line. What I want to know is this figure here. So I do not use the figure on the M1, 5, 15, 30 or H1 or H4. No, I use my trading strategy. I use it from the daily, the weekly and the monthly. So if I want to exit off, if I enter a trade and I'm only trading for the day, this is just me, I use the daily ATR average on a currency pair, and it works for any currency pair, right? So on the monthly, let's go to the monthly. On the monthly, how do I read this figure? So this, on the monthly time frame, one candlestick here represents 1 month, right? So most of you guys should already know that. So for the month, on an average true range on the ATR for the past 14 months, here that is what the 14 stands for, there's an estimated value of 0.0403, which is 403 pips on an estimated for each month. The Euro USD pair has moved on an estimated value 403 pips for the past 14 trading months. So if I go to the weekly, it's going to be 14 weeks. For the past 14 weeks, the Euro USD has moved 152 pips average for the past 14 trading weeks. Now, when you are looking at the ATR, you look at the last 3 numbers, right? And it tells you that in pip value. So you guys should learn your pips. What is a pip, right? I would recommend a site, but not in this video. I'll do it in the next video. And even the broker that I do recommend has a mini forex course in institute that you can learn a little bit about forex in the broker. So there's an educational platform free of charge. So on a weekly basis, the Euro USD have moved on an estimated value 102 pips for the past 14 weeks. So if I go to the daily, for the past 14 days, the Euro USD has moved 52 pips estimated value each trading day for the past 14 days. So I take the daily figure, which is 52 pips, and I trade, and now you look for your analysis on whatever time frame you trade. Like let's say you trade the H4 or the H1 or the M15, sorry, and let's say you get your pattern, you see a pattern here, you maybe see you draw a trend line, you break a trend line structure and all these things, whatever it is, right? Now Another thing that I use to separate my trading days is these white lines here called the period separator. How do I get that? Any broker has it. You go to properties, and I use the show period separator. If I move it, now I wouldn't have no white lines, and I wouldn't know really what is my trading day. So I use that to really guide me through separating each day. So I use that to separate. So now between each day I know it's 24 hours. So this is presently right now. So when it reach across the white line, it's the next trading day. So I hope that's very helpful to you. Now the ATR has moved 55 pips on an estimated, on the daily time frame, 52 pips estimated for the past 14 days. Now let's say I'm on my M15 and I want to take a trade, and I know, okay, hey, the market opened, and I saw the market between Asia and then mid-London. Look at exactly how I did it. Asia, right? Right, this, let's say this is Asia right here. Right, I did it. And let's say this would be London right here. Right, so we have Asia, we have London. Now Asia, on my broker Xness, what I use, London opens 7 on the broker time frame, right, which is this area here. So London opened there, on this candle here. So this is London right here. So London opened there. So I know with Asia, London takes out Asia and it's done. I would take my cross and measure the ATR to see if it exceeded the day already. So between Asia and London, I had an estimated value of 426, which is equal to 42 point some pips. Let's round it off, 42 pips, right? And the market move on estimated for the past 14 trading days, 52 pips. So I say, okay, since I saw some consolidation, I am waiting for a reversal to see if I see a reversal. So I saw a mini W, one leg, two leg, three, and now the fourth one, which was this one. All right. So I definitely did got this trade. I got this trade for like about $9 or $10. I just take a small scalp. I'll call this a small scalp. So I use the ATR to give me that trade. Now let's measure from the base to the top and see what we get. So far that was, let's put it at 40 pips, right? Now on yesterday, market open, exceeded above, went same 42 pips, and went down on an estimated value of 574, which is equal, let's put it, round it off, to 57 pips. All right. So I do hope that this video has value to you guys on how to use the ATR. This is how I use the ATR, and I do have a treat for you. There is a site called investing.com. You can go to investing.com and you go to tools and you go across to more in tools, and you would see forex volatility. You click on it and you're going to get a forex volatility calculator. Now what this does, it makes life a bit more easy for you. These are all the pairs for forex, and you get gold as well, metals and stuff, and it gives you on a trading particular C has a 70 pips already did GBP USD has an estimated value of 100 pips. If I want to use the US CAD, an estimated value of 86 pips, right? So I come here sometimes and I check out the average of a candlestick. So as you can see, the euro here has an estimated value of 66 pips for the day. So they just give you a period. So this is for the past 10 weeks, right? Now, this 10 weeks is equivalent to trading days. So that would be like 2 months and 2 weeks. But if I come across on the ATR, this is only 14 trading days. So what I can do with this particular tool that I show you, I can drop the weeks to like what it is, let's say 4 weeks, right? I could do 4 weeks. 4 weeks may be too much, right? Then you see on the euro, the GBP USD from the 100 pips it reached 91 pips. I estimated value for the past 14 weeks. If I do 1 week, it's going to tell me that within that 1 week, which was last week, previously this week, the GBP USD here has an estimated value of 100 pips, right? So I hope that this tool is very helpful to you guys. All right, so and have a blessed one and stay consistent, traders.